What is going on, guys? Today we're going to talk about a stock that I am absolutely loving right now, and I just keep adding to my portfolio, and that is Facebook stock. And we're going to take a look at it, why it fell so much this week, what's going on with the stock, what's happening with the overall market in terms of these kind of tech stocks that have a lot of advertising focus on them. And then finally, we're going to end up with looking at overall, based off the PE ratio and based off the previous PE ratio, where we think the stock price could go over the future for Meta stock. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So as I mentioned in the start of the video, basically what's gone on is Facebook has fallen off a cliff, and it started to rebound a little bit, as investors are jumping in, seeing that it's such a great deal. But it's just crazy, right? It just fell through the floor here, and this was on Monday, and this all came on the back of news from Snapchat. So if we jump over to Snapchat stock, we can see that it had a very similar trend, but significantly worse. Here, Snapchat down 37.7%. Well, Facebook was only down on the day, they were down around like 7 to 8%, and since they've recovered and they're only down just under 4%. So Snapchat really got the brunt of it. But let's go ahead and jump into what happened with Snapchat and why that had such a huge effect on Facebook. So what happened on Monday is Snap's CEO Evan Spiegel, I don't know if I'm pronouncing that right, but basically he warned of even slower growth than anticipated. So this shocked investors because basically earlier in the year, after their earnings, they had announced, during their earnings, they basically announced that they predicted or were forecasting that the market was going to be very, very slow this year for Snap. And basically what the CEO came out and said on Monday is that things are slower than they had imagined. And basically what this article gets into, so we'll just touch on some of these points. So social media companies were already having a rough year with cutbacks in digital ad spend caused by inflation, rising inflation, supply chain challenges, and the war in Ukraine. And then basically, right, the Snap CEO warned late Monday of an environment that's worsened since his company reported quarterly results in April, when guidance was already very disappointing. So that is huge, right? Guidance was already disappointing, so Snap had already fallen a bunch. And basically on top of that, right, he said that things are going to, or are worse than we had anticipated. And that's what his quote gets into here. So the macro environment has deteriorated further and faster than we anticipated when we issued our quarterly guidance last month. So basically, right, saying that everything is worse than he had expected, and they're not getting better anytime soon. So that was huge and really bad news. And obviously Snap having a lot of marketing ad spend, Facebook is a very similar business model, so they had a huge drop in the stock price. And here is a quick list of stocks that have similar platforms that fell by and how much they fell by. So obviously Snap, we had falling an astounding 43.1% on Monday. Pinterest fell 23.6%. Facebook, parent Meta, dropped 7.6%. Google lost 5%, which Google is obviously huge, and Google holds up a little bit better because they have a lot higher stock price, but overall they were still hurt. And then Twitter down 5.6%, which Twitter I'm kind of surprised by, because Twitter, I would almost expect it to be down more than Facebook, and probably somewhat similar to Pinterest, probably a little bit less. But Twitter is all ad spend as well. So that's kind of a surprising one that it only fell by 5.6%. But overall, really bad news from Snapchat that had a really bad effect across the entire market. So personally, I am long Facebook, and I keep buying shares of Facebook because the value that it's at is just crazy, in my opinion. And I mean, we're looking at the last 5 years, and overall the stock is just it's below lows that we saw. I mean, we haven't seen a price like this since 2019. So I personally love the stock. I think there's a lot of potential upside still with Facebook. I like what they're doing with their VR side and things like that, but that's not really what this video is about. We're just purely going to look at the valuation. So when I first opened this up, I saw PE ratio and I saw EPS, But I just saw these numbers and I was like, what is going on? Do they have the PE ratio on there twice? But no, they're just, their earnings is $13.21 and their PE ratio is 13.91. So that's kind of crazy. You don't really see that very often. It doesn't really mean a whole lot. It just kind of confused me and I thought it was funny coming off the bat. But let's jump over to statistics here. This is where we'll get forward PE ratio. This is kind of a good metric to look at, right? You want to know the forward PE ratio is, in my opinion, more important than the trailing PE ratio, but it's interesting to look at how it's evolved over time. So, basically a year ago, the PE ratio was almost 30, so it was sitting around 29, and then ever since then it's kind of dropped all the way down, and now we're even below 16 here. And obviously this number is still even lower. Yahoo, sometimes they don't update these very quickly, but obviously the actual PE ratio is closer to that 13 number. So we're seeing this already significantly lower than we would really expect from a company like Meta that has a ton of growth potential ahead of it. Up here, we have the PE ratio basically over time. So I really like this website. So it's called Macro Trends. And it's really interesting because you can basically look at the PE ratio and, graphically over time. So instead of looking at Yahoo where it just gives you the number, this gives it to you graphically and kind of how things have moved over time. So what we've seen, in what I would call obviously stronger markets relatively, obviously in 2020, we saw things fall and drop down. And even then, the PE ratio held up relatively well. But overall, even over the last 2 years, we've seen the PE ratio kind of hover around the 30 to like 25 range, and have a lot of strength there. So that's what we're going to kind of look at, and we're going to jump into here next, basically using this PE ratio to determine what a fair value might be for Meta stock right now. So I've done this in previous videos, but I haven't done it in a while, and I love looking at these things because it gives you a good idea, in my opinion, using PE ratio of where the price could go if the stock were to reach previous types of PE ratios. Basically, basically looking at the price and assuming that the earnings stay constant, and obviously the earnings don't fall significantly, but if the earnings stay constant, where could the price go if the PE ratio went back to relative ranges that it's been in previously? So what we're looking at here and what we have is the current price of Facebook, which we're just having there. I know after hours it fell a little bit, but basically we're around 183.83 as of today, May 25th. And the PE ratio as of right now is around 13.91. So again, that's just the number I pulled off of Yahoo and Google. And then what we have listed down here are potential PE ratios. So when we looked at that chart previously on Macro Trends, we kind of saw a range that was around 20 to 30. That PE ratio of Facebook has basically stuck between those numbers in relatively strong markets, and it's even creeped above those, but we're just going to say for safety's sake that's a fair value for Facebook stock, somewhere between 20 to 30. So if Facebook stock were to go back up to a 20 PE ratio, we would see a stock price of $264.31, which is equivalent to a 43.78% return if you were to purchase at this $183.83 mark. So obviously huge return there. That would be excellent, and that's only going up to a 20, which is kind of crazy. So here, if the stock price were to go, or if the P ratio were to go up to 25, we would see it go even higher. Obviously the price would go even higher. Again, this is with earnings staying constant. And basically what you see is a $330.39 price target, which would be a 79, almost 80% return, which again would be a crazy return, a very good return. And finally, let's take a look at 30. So in my opinion, I think 25 to 30 is actually reasonable. I think it's very, very reasonable, especially with the amount of growth that you'll see with Facebook over the next 3 to 5 years. But here, if you see, if the P ratio were to go up to 30, again, with earnings staying constant, you would see a price target of almost $400, so $396, and that is 115% return. So that is awesome. That would be, obviously a little bit on the higher end. That would be have to have a very good market, a very good, economic, macroeconomics going on. But honestly, none of these, I don't think any of these are unreasonable, especially like I said, over the next 3 to 5 years. I don't think any of these are unreasonable at all. So that is why I am buying Facebook stock. So let's jump over and actually take a look at what the analysts think. I always like taking a look and seeing what analysts are basically predicting for the stock. So we have 34 that are saying Facebook is a buy. We have 5 that are saying overweight, 15 that are saying hold, 0 saying underweight, and 1 that's saying sell. So I'm kind of surprised that there's only 1, especially after some of these, some of the news. But this could obviously change with the Snapchat news. I mean, as the market starts to digest that, and some of these analysts actually start to look at this data and things, that could change. There could be a couple people saying sell, and some of these price targets could change as well. But what we're most interested in, I mean, we can take a look. Someone has a high of 553, which is even above our estimate, which is crazy. I mean, that would be awesome, but I think a lot of things would have to go right for Facebook stock for it to reach there. Again, a lot of these analysts are looking at a year target, so 553 in a year, personally, I think that's kind of unreasonable. Median of 290, and then a low of 185, which is basically where the stock's at. So they think the stock's going to trade sideways for a year, which you never know, it could. But overall, the average is 287.05. So if we jump back over here, just to make the math easy, we're going to do it in this spreadsheet, and that would be a return of 56.15%. So if you take the average, basically you get a 56.15% return, which looks like it's just over a 20 PE ratio, probably like a 22 PE ratio would be my guess. So overall, really positive things. This is why I keep buying Facebook stock. The valuation is just crazy. I mean, even if they left their business alone and just let it kind of run, I mean, the valuation is there, but they aren't. They're trying to innovate. They're trying to do a lot of things. They're looking into the metaverse, expanding their technology. Oculus, I think, is going to be huge. There's a lot of positive things that I see for Facebook stock, and I think they could potentially even overtake a lot of these other companies like Apple, Tesla, Amazon as being the highest market cap company in the world, in my opinion. If they execute everything very, very well, I think they could get there. So that's just my opinion. Obviously, evaluate the stock for yourself, make your own opinions. If you think Facebook's a buy, then buy. If you think it's a sell and you own some, then sell, whatever you're kind of feeling. So obviously, do your own research, look into it. I'm just some guy on the internet, but I do appreciate you watching this video. And if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit the sub button. Otherwise, as always, have a wonderful rest of your day.